MicroStrategy unit gets 205 million US dollars in collateral loan from Silvergate to buy Bitcoin. The term loan can also be used for general corporate purposes. MicroStrategy, a subsidiary of MicroStrategy, has received 205 million US dollars term loan from crypto payment provider Silverbank SI. The loan was given through the Silvergate Exchange Network (SEN) leverage program, which issues US dollar loans using Bitcoin as collateral. The loan was collateralized with about 820 million US dollars worth of Bitcoin, according to a regulatory filing. Shares of MicroStrategy were flat during pre-market trading. MicroStrategy, a software company, has become known for its embrace of Bitcoin. In the fourth quarter, the company took a nearly $150 million impairment charge on its Bitcoin holdings because of the cryptocurrency's price drop. The interest-only loan is secured by a certain portion of Bitcoin held by MicroStrategy's collateral account, which has a custodian agreed upon by both parties. MicroStrategy can use the loan to purchase Bitcoin or pay interest and fees related to the loan for MicroStrategy's general corporate needs. Launched in 2020, Silvergate's SEN leverage program had 570.5 million US dollars in commitments at the end of last year, according to the press release. Quote, the SEN leverage loan gives us an opportunity to further our position as a leading public company investor in Bitcoin, end quote, MicroStrategy's CEO Michael Saylor said in the press release. Quote, using the capital from the loan, we've effectively turned our Bitcoin into productive collateral, which allows us to further execute against our business strategy. Are they even a software company at this point anymore? I feel like they're just a Bitcoin investing company. Anyways, a lot of people do this where they put up the collateral of their cryptocurrency and they borrow against it in US dollars. Some people buy more. A lot of smart contracts are done like this too. You can do it decentralized as well. This doesn't seem to be the case here in this particular situation. But what does it mean? It definitely does mean that, well, the price goes up, right? Because more and more Bitcoin keeps getting purchased. What will be interesting is if someone outside of MicroStrategy and outside of, I guess, Michael Saylor and Elon Musk starts hopping into Bitcoin and really starts making large purchases as well. The special part about Bitcoin here that I think is important to note is that because of the supply cap, the more they accumulate, the more your less amount of Bitcoin is worth, in theory, in the long run. And I just stepped on a screw, I think. But there you go. Let's talk about more mining investing going on too. D.A. David's cuts miner strongholds target by 40% of earnings. The stock is still super cheap compared to other mining peers, analysts say. Bitcoin miner Stronghold Digital, SDIG, price target was slashed 40% to $25 on slower than expected operational progress to date and supply chain challenges across the sector. Investment banking firm D.A. Davidson said in a note. Quote, previously our model was heavily based on projections around the IPO, but with slower than expected progress to date and supply chain challenges across the sector, we think it makes sense to be more conservative, end quote, D.A. Davidson analyst Chris Brendler wrote in the note published on Tuesday. D.A. Davidson expects the miner to achieve a hash rate of 6.4 exahash per second for 2022 and 12.6 exahash a second from 2023, down from the previous estimates of 7.4 exahash a second and 14.4 exahash a second. The Wall Street Bank also lowered the miner's revenue and earnings before interest, taxes, depreciation estimates for both years. However, Brendler thinks the stock is still super cheap as Stronghold's waste coal power mining operation will have a cost average over other miners who will see higher power costs due to rising energy prices. Stronghold stock is rated buy and the miner is set to report its fourth quarter earnings on Tuesday's post-market. The shares of the miner have fallen about 66% since it started trading on October 20th, while Bitcoin fell 22% in the same period. Stock fell about 2% early day trading, while most peers were flat. So basically what we're seeing is not even necessarily a reduction in the stock prices for crypto mining companies from the actual cryptocurrency market, but it sounds like to me it's coming from supply chain issues. Now, if you guys aren't aware, right now when you take a look at ASICs and especially Bitcoin ASICs, the ROI on these Bitcoin ASICs are getting drawn further and further and further out. The demand is super high. We're hoping for alleviation from, of course, Intel, which is working on, their own basically BMZ2 chips to go into third-party manufacturer setups. Maybe Block will be making them, so on, to help alleviate some of that, especially on the state side. Now, from what I do understand, we have the tariffs going away on China, if I understood this correctly, timeline, which means that for ASIC miners right now in the immediate future, we could definitely start seeing a reduction in the price by about 25% on the ASIC miners. So be looking out for that, because we're seeing it on the GPU side, and we should start seeing that on the ASIC side, if that is the actual reasoning that we're getting from ASUS, like we talked about earlier. So I'd be very, very careful, because a lot of the ASIC companies also, though, are going to be sitting on stock, unfortunately for them, that they've paid a higher price for to get over stateside, and they're going to be trying to sell it for those higher prices. But the fact of the matter is that that pricing is just going to come down due to that. Plus, of course, in the future, we're going to have supply alleviation from new players in the field of ASIC mining. That being said, if we look at the markets, right, we are seeing a pretty good increase in, of course, GPU mining, with actually a whole extra, almost going back up to $6 per 100 mega hash at this point. And we are not seeing the same increase in any ASIC mining. That includes Kadena. That includes pretty much everything except for ETH hash. So it's really important to take a look at these and pay attention to them. Plus, with all of the big institutional investors, smaller farms may want to roll that dice on GPU mining over ASIC mining, at least until that pricing on the ASIC mining comes down. Let me know what you guys think. I've been all over the place as far as should I be investing into Bitcoin miners? I'm definitely going to be purchasing 3 more. That's my goal at least. But like I said before, I'm really disappointed with Bitcoin ASIC mining, because an $8,000 investment that isn't mining and has to get RMA'd is way worse than having one GPU on a $8,000 GPU mining rig go down, and then at least you have 7/8 of your rig still up and running. So it's really hard at the lower level, I think, for those ASICs. If it was a big firm and you have hundreds of ASICs or whatever, and you have one go down, then maybe that's not as bad, right? I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.